More than 3,000 homes will be built as part of a new community housing partnership between Melbourne developer Assemble and not-for-profit Housing Choices Australia. Joining us to discuss the deal and much more is Chris Daff, Managing Director at Assemble. Welcome to Behind the Deal, Chris.
Thanks for having me, Adam. Looking forward to it.
Now let's start with Assemble. For those that aren't entirely familiar with your group, can you just describe what your company does and who you are?
Sure. So we're primarily a Melbourne-based development and community management organisation. So basically a purpose-built build-to-rent platform. We don't do anything else other than rental accommodation. We've really got two models. We've got one that we've spoken about in the past, which is a model where we support people into home ownership with a 5-year lease and a right to buy. And the other model, which we're here to sort of talk about today, which is our social and affordable rental accommodation. So they're pure play build to rent projects, assets that'll be held in one line in perpetuity. And nationally, we've got a portfolio of about 4,500 dwellings under the pure play build to rent. So across Melbourne and Brisbane, and about 1,000 apartments to be delivered under the home ownership pathway model.
So this is a really interesting partnership with Housing Choices Australia. Who are Housing Choices Australia, and how did this partnership come to be?
Sure. We ran a process, to be honest, with about 6 or 7 community housing providers, and there were some certain elements that we're sort of looking for in the partner. Housing Choices Australia ended up being our partner of choice. So one's a bit about scale, so they're managing over 8,000 dwellings nationally, predominantly across Western Australia, Victoria, and New South Wales. They started off as an organisation primarily focused on sort of disability accommodation, but they're much more than that now. And one of the things that attracted us to Housing Choices Australia was the sort of strength of the organisation, the governance they had with their board, and the sort of horsepower they have within their organisation to run at the pace that a sort of more traditional private sector development type organisation would run at. And they've really sort of been able to deliver on that. So, they're there with us the whole way through. They're a legitimate joint venture partner in these projects, and they've got some real value add throughout the development process. And then particularly operationally, they're critically important when we're housing very low income tenants, some of which have complex needs. Housing Choices Australia's got a network of over 184 referral services that they can connect people into to the extent they need a bit of help, outside the housing piece. So they're really sort of fundamentally important to the way in which we're managing these communities and integrating people that find housing really difficult through to sort of just more market type dwellings. Yeah.
So what is the partnership? What's the nature of it? How does it work? Who does what? Can you just talk us through that partnership design?
Yeah. So broadly, we've set up a jointly owned development entity, which that's a not-for-profit entity that brings taxation concessions and things that we utilise as a result of delivering very low-income housing that helps underwrite the viability of these projects. We also access concessional finance from the National Housing Finance and Investment Corporation. So we've jointly established an entity to develop the suite of assets across the portfolio, and separately that's all sort of quite technical and sort of in the structure. Day to day, they're a legitimate joint venture partner. We've got weekly meetings. We've set up a project board that meets monthly to sort of govern the sort of direction of the projects. And then one of the core pieces is, getting the buildings built and everything else is, those steps are pretty well known. One of the things that's been critically important to our investors is saying, what's the operational model? So if every fifth door's effectively social housing integrated with market housing and some discount market housing, then what does that operational model look like? How do you make that a seamless experience for all tenants? How do we give people that are paying not much rent in social housing access to the same services that the other tenants have got, etc. And Housing Choices Australia, they're managing over 8,000 dwellings nationally, right? So they're already, one of the largest build-to-rent, sort of businesses in the country. So they've got deep expertise in that. So what we do is in the operational phase, we've sort of got a jointly operated management group. that works together on a project by project basis, community by community basis to manage the day-to-day operation of those projects.
And then in terms of the capital that's required to invest in this, where's that coming from? What's the investment model look like?
Sure. Yeah, so the Assemble team has managed the arrangement of the capital, debt and equity capital. So the equity capital, at the moment, that looks like that will come from Australian superannuation investors, and there's sort of a group of three that we've been working with for the last 12 months on the opportunity. We're sort of getting to the phase now where we're moving into a documentation phase. So, and across the portfolio of projects, that's sort of 350 million plus of equity capital. And we're looking, it's quite interesting, these investors are typically a build to rent model would be an exit 7 years post completion when the asset's stabilised, and you'd assume a certain capitalisation rate and the like. But we've actually built some really complex 6-decade hold models. So we've got 60-year life cycle models that we've developed with our advisors to say, well, how often you're renewing kitchens, etc. And our investors are saying this is like a bond-like investment for us. So what happened during 2020, which was really interesting, which the resilience of multifamily housing was really underwritten. So the actual rent receipts in residential, etc., compared to investments they might have in malls or office buildings or, logistics was strong as well. But they saw residential rent as being a very resilient part of the housing market. So our investors saying we actually want to hold this for the extremely long term because we see it as almost like a bond type like return where we can say there's highly predictable, relatively modest returns over time, but they're pretty certain. So that's the way our equity investors are looking at it, and the providers of our debt capital, which will be commercial banks, coupled with NIFIC, National Housing Finance and Investment Corporation, just look at pretty similar measures to, what traditional sort of real estate type lenders would look at as saying, what's our sort of coverage on the interest costs each year, etc. So they're relatively highly levered structures compared to traditional real estate. So we might be sort of funding 70 to 75% of total project costs with debt capital, and the residual with equity. But the beauty of the NIFIC finance, we've done a lot of work with them over probably 2 years now, is you get very long-term fixed interest type debt facilities. So when they do their bond issuances, they're sort of 15, 20-year notes that they're putting into the bond markets.
So specifically then the projects, Chris, what sort of projects are being developed, and have you got a couple on the front of that pipeline that you can talk specifically to?
Sure. Yeah, so they're sort of at scale, I guess. So, we've got, we did a little pilot project, which is almost finished in Melbourne, which is 73 apartments. That's completely subscale for a build-to-rent platform. You can't operate a 73 apartment building and have a viable going concern business for the future. So our minimum project scale now is really around the 200 apartment mark. So, and the projects in the partnership with Housing Choice Australia vary between the smallest projects, 220 apartments, and the largest projects, about 1,000 apartments across 2 stages. So across the entire portfolio, it's 20% social housing directly managed by Housing Choice Australia. So that's a constant. And we've got projects, the 220 apartments is a partnership with the Uniting Church in Coburg in Melbourne. So we've got a lot of middle ring type locations. We've got projects in Preston, Clayton, Bentley, Port Melbourne. We've just picked up a site in East Brisbane, which will be of interest to you guys. So we'll do about 450 apartments on that. That'll have HCA in it as well. And we're also looking to partner with the Queensland Government on the build to rent pilot scheme up there. So yes, generally we've got a mix of architects. Some of the things that we do a little bit differently is we've got one executive architect. So we've got one architect that documents our entire portfolio. So we do one type of kitchen across 3, one type of tap, one type of shower head, certain type of flooring. So, and a bit of that's about getting efficiency and the cost to deliver a portfolio of projects. But a lot of it's also in the efficiency and your ability to maintain and renew those assets over time. So having 14 buildings with 14 different types of toilets installed in them, is unhelpful for us because, you've got to store 14, sets of spare parts for your buildings, if that makes sense.
Yeah, absolutely. And so let's talk about the tenants then. What's the typical tenant profile? You mentioned there's a mix in there. Can you just unpack specifically under this partnership, what sort of tenant profile exists?
Sure. So in the Victorian context, and that's probably that's where the majority of the portfolio is. So the social housing tenants would be people that are currently on the social housing waiting list or have expressed interest in receiving sort of government supported, public housing type dwelling. And they would typically be in the very low to low income bracket. So they're people that would have a component of their income would probably come from part-time employment, and a component of their income would come from government programs, Commonwealth programs, family benefit, job seeker, these type of things. They'd probably also qualify for Commonwealth rental assistance. One of the differences with our projects, Adam, is that because we're not taking enduring government subsidy payments and things to make the social housing available, this is a privately funded scheme. So is that we do have sort of a high level of control over the sort of tenants that we place in our buildings. So Housing Choice Australia has developed, still a very respectful but a robust process to spend some time with the tenants, interview the tenants and things like. Because I look at it and say, well, if we're going to give out housing at sort of half market rent, that's a fantastic opportunity for us to house people that find housing hard, but we also want to make sure that the people that we're putting into our communities, are going to be sort of cohesive members of those communities. And look, public housing tenants get a bad rap, right? Like I've met hundreds of them, and 98% of them are terrific people, and then there's a sort of noisy minority that have, got some sort of bigger issues. So, but typically, in Coburg, for example, the United Church is interested in housing single women over 60 who are facing homelessness and these types. So sometimes there's partners that we might be partnering on a project that have got a specific cohort that they're interested in. But there are certain cohorts that are emerging, like those single women over 60. That's the fastest emerging group in homelessness in Victoria. We've looked at programs to accommodate women with children fleeing domestic crisis and these types. So, yeah.
And just finally, Chris, how does this partnership sit alongside the other activities that Assemble's doing? And I guess what are you learning from this that you can then also apply across the rest of your business?
It's interesting. What partnering with an organisation like Housing Choices Australia does to us. So there's one thing. So there's the internal team. It really steals the resolve of the 40 people that work at Assemble as to the sort of purpose that this business has and the sort of type of work that they're going to be able to execute here. And I'll be honest with you, I reckon half the people that want to work at Assemble probably wouldn't work at Assemble if we were doing high-end build to rent with all the sort of frills and things. So they really sort of do believe in the purpose of the organisation. So that's one big benefit. The other benefit is, we've been able to sort of demonstrate to government and other organisations that low-income housing is possible without sort of hitting the public purse constantly for subsidy and handouts, etc. So that's been sort of another very big benefit of having them in the organisation. They've also helped with our ops team, so our community management model. They've got some deep expertise in that, so that's been a big benefit. What the thing is, I guess, that we're sort of very focused on is we think we'll always have a partner like Housing Choices in all our housing. So we like the impact piece, right? That's clear. We want to be in very low income housing and low income housing. And that's one element of it. But also we need to be able to attract capital. There's also, from an investment thematic, the stability of low income housing and low income rentals internationally. It's the most stable part of the housing market. So us giving 5, 10, 15-year leases to individuals or couples or families or whatever, and knowing that they're going to be a good, stable tenant for the long term is also a very good thing for our capital partners because they become highly stable and predictable cash flows over time. So, and we think HCOs is sort of really important part of that mix, and we think they're a very good interface too with some of the sort of very low income tenants that we'll be housing, because as a sort of not-for-profit housing provider with all those sort of services that they can allow people to access, that would be difficult for us as a private build-to-rent platform for us to be able to resource up to be able to provide that sort of same level of access to service and the likes.
We've been following your journey to date, and we'll continue following it as the years go on. Congratulations on this deal, and we wish you all the very best, Chris.
Thanks so much for having me, Adam.